Hi, welcome to Wealthmills Securities Weekly Market Wrap. It's a joy to me to come before you and share about the global economy and markets updates. This week was a mixed week for the global markets, but Indian markets are trending in a positive territory. US markets, they were volatile, of course, and Indian markets, they are trending in a positive territory. If you see the Indian market trend, currently the trend, shorter term trend is looking in a upward bias. It is technically looking in upward bias. We are just kissing distance to the level of 11,000 level on Nifty. Of course, everybody were bearish and everybody were expecting and waiting the markets to come down, but markets are saying and refusing to come down. This is the mood of the market in Indian markets, because if you see the main reasons why the market is in an uptrend and what's causing the market to be in a bullish trend. The first and foremost is the support markets are receiving from the global cues. As you are aware, the US markets are trending upward territory, and the Nasdaq, especially the technology index stocks in United States, are giving a support to Indian markets. And also the domestic reason for this upward trend in India is the FIIs were the so-called net sellers earlier. They moderated their selling activity and they are very neutral in terms of selling. Whereas the DIS are sometimes they were the sellers, but it's not a heavy selling. It's just trimming down the positions wherever they have significantly made some money. But DIS are always coming for rescuing the markets whenever markets are coming down. But at present, the support that's coming to the markets is coming from, surprisingly, the retail investors are buying at this point of time. It's a significant buying that's coming from retail investors, and when compared to the statistics of other segments, it can be the DIS and FIS. Right now, sometimes the number of buying activity, the activity is more coming from the retail investors. We are not sure how many days it's going to continue, but it's a strong retail activity that's taking place. But as I said, I'm not sure. But all the retailers, if the general tendency and the mood of the retail investors historically, if market get into a bear hug, these are the people that get disappointed from the market. That's what eventually happens every market cycle. At Wealthmill Securities, we are know and we are cognizant about this fact. We are there to navigate our investors and to make their portfolios safeguarded. We are there to navigate our investors to face and to overcome any kind of disturbances in the market. Our strategy at current point of time is to go in a staggered manner. This is a market not to go jump and buy the stocks immediately, but it's a market buy on dips and sell on rally market. That's what we have been witnessing. It's not sell on rally means it's not exiting the complete positions. Whatever the major profits you make in the shorter term, it's better to book some profits from the table at this point of time. But we are always bullish, bullish in the long-term fundamental story of in India, and we continue to be net investors in Indian stock markets. I would like to emphasize to you what are the factors that influencing the stock market at present. If you have to divide the factors that influence the stock market, we need to divide into two spectrums. One is the primary factors that influence the market. The first and foremost, the primary influencer of the market is, first one is liquidity. The second one is the sentiment. Third one, valuations. And the fourth one is the interest rates and monetary policy. So when you come to the first one, the liquidity, it's a rally led by the liquidity. There is a fear among the investors that they can miss out because everybody missed the humongous rally that markets were witnessed uh, from 23rd March. Within a span of 4 months, markets are at a highest point of the time. That too, technology stocks hitting all-time highs. So it's a liquidity rally, and there is a ample liquidity available that is there across the systems at present, because the non-performance and the uncertainty in other asset classes like the real estate and other asset avenues. Stock market gives ample liquidity to the investors to enter, and there is greater clarity in terms of uh, the company earnings in the days to come over a longer period of time. So the money that's going to stay for a longer period of time, the investors across the globe, they are currently allocating the money to equity markets. The second one is sentiment. We are very optimistic towards the COVID vaccine. We are not sure when it will come, but every week there is a news, and here and there it comes. The COVID vaccine is the trials are in advanced, and it's going to be a very progressive vaccine that's going to come in the coming weeks or coming months. So this is causing the positive sentiments to the market, uh, and the monetary policy and interest rates. The third one, the monetary policies, as you are aware, across the globe, especially in US, as the interest rates are at a low, and some areas it is at a negative zone. It is as India is at a all-time low, and we can expect in India the monetary policy in the coming days. RBI may further reduce the interest rates in the days to come. So the monetary policy is in favor of equity markets. So the primary indications, the primary requirements for the markets are in terms of positive towards the stock markets, that's making the markets to go up. Of course, valuations are stretched at present point of time, but market is trying to discount the future earnings of the stock markets and the stock earnings. And what market is anticipating is in the coming days there will be a pent up demand for the consumer activities concerned in the days to come. The monsoon gives a lot of comfort to the Indian economy. If the monsoon is good, and the predictions from Met Department says the monsoon is going to be above normal monsoon, so that raises the demand for the rural consumption in India. That makes valuations also to be comfortable in Indian stock markets. The secondary parameters that influence the market, these are the long-term parameters. One is GDP growth rate. As the long-term GDP growth rates is in line, and there will be a complete recovery in the economy once these COVID issues are sorted out, and probably we may see, we don't see growth today, but on a longer term basis, after 6 months or 1 year, the growth trajectory will come back into the economy, and there will be a pent up demand that drives the economy. If you see, the classic example for the growth is currently the China, the numbers, figures coming, the growth numbers and the factory output numbers are very encouraging when compared to the forecast what people were expecting from China. And the global monetary policy and is concerned, it is in a downtrend. The interest rates across the globe are in favor of growth. The other, the business cycle or the growth cycle. Still, this is one area we need to wait and watch how the growth cycle, the global growth cycle, that's going to take place. So, by and large, the primary indicators for the markets are very supportive at this point of time. Once the issue of COVID get resolved, the secondary factors like growth will improve over a period of time. So these are the key factors that are trending the markets in a upward trajectory. This week I have to share about the sector, that is IT sector. The technology stocks in India performed very well. I cannot say pure technology stocks in India, because this kind of services offered by Indian software services company, IT companies are different. We can't say it's fully technology when compared with the FANG stocks in US like the Facebook, Amazon, Netflix and Google. They are the full-fledged technology stocks, and their valuations are different. The kind of valuations they demand from the markets is GDP size. That's the kind of market capitalization they demand. While coming to the Indian stocks, what are the frontline Indian stocks except TCS, Infosys, and Wipro, and the stocks in India, the frontline stocks, especially Infosys, Wipro, and the mid-tier stocks, software services stocks in India, they posted a surprising numbers. What led these IT sectors to come back and rise in India? Analysts across in India, they treated IT sector as a neutral sector. Uh, as per Wealthmills is concerned, we are still waiting for a technology, full-fledged technology stocks in India. We don't have any significant positions in Indian software services. Of course, we have some interest towards the cybersecurity stocks, and we are still exploring some quality, high growth cloud computing stock in India, and we might be interested in the days to come some robotic companies in India. These are the segment we are interested to have a technology stock. Whereas the current technology stocks in India, like the Infosys, TCS, and Wipro, are the other mid-cap technology stocks or software services stocks. We don't have any significant position in India. But at some point of time, if the valuation comfort is there, we definitely will go and buy some technology stocks to our investors. This week, the change of leadership in India is taken by technology stocks rising. I never seen Wipro rising 15% in a day in the past 2 decades. So this week, what led these software services stocks in India to rise? One is the costs are under control. They posted very quality operational growth, and in US, because of the COVID-19, there is a lot of emphasis has been given towards the digitalization, and the companies across US, they never reduced their IT spends, and in fact they're increasing their IT spends, and the stimulus package from US governments has helped the Indian IT companies. As the companies in US, they want to increase their IT budgets, that's helping the Indian software companies and to give better guidance for the future. That led the software stocks in India to be in a positive territory. Any dip in these kind of quality stocks, the mid and large cap IT stocks, gives a good chance to accumulate the stocks for long term. But don't expect a multi-bagger kind of returns from these stocks because they are still remained as a software services companies rather than transforming as a full-fledged technology-led companies. This week I want to share about a company. I just want to give a gist and a theme about a company. The company name is Delta Corp. I have been tracking this company from past nearly 17 years. When the company was Arrow Webtex, we were interested in this company. There was a demerger from this company. It was basically started as a textile manufacturing company. They used to manufacture the elastic for the clothes, but of late, over a period of time, this company has diversified this business model from a textile company. They started a company, they demerged the company of the gaming industry, basically gaming in the sense of casinos. They started in Goa. What I liked in this company is the entry barriers in this company. Getting a casino license in India is not a easy thing. This company have the monopoly. The management of this company is amazing management led by Jaidev Modi and Jia Modi. Just to give a background about Jaidev Modi, is a gaming enthusiast who understands the gaming very much. So with that passion towards gaming, he started Royal Casino and King Casino and Deltin casinos in India. In Goa they operates from Goa. I have been tracking this stock from quite a long time, and I'm very much convinced about the long-term fundamentals of this company. And this company have a very strategic investors, big names like Rakesh Jhunjhunwala and Radhakrishnan Damani. They are the investors, key investors in this company. At present, as you are aware, due to COVID-19, the stock valuations came down from a level of 300 to currently the stock is trading at 90 rupees. But it's not a stock recommendation to go and jump this stock immediately. It is on my radar at some point of time. If the valuation is correct, that gives a very good opportunity to the investors to accumulate the stocks at a longer period of time. As the economy GDP growth rises, these are the industries that's going to prosper. These are the industries that's going to multiply in the days to come. The company have wonderful plans towards the gaming business in India, as well as some other countries. They want to start gaming business, like countries like Sri Lanka. They want to start. It's a lot of entry barriers are there. In India, it's a restricted industry, but the margins are very high in this business, and we believe as the valuations correct, it gives a good entry level to the stock in a longer term perspective. To more about the stock, more in depth about the stock, just give a call to our research team. We are more than happy to share about in detail about this company, because it's not possible to share the entire details on a video chat. This is all with me this week. Please do take care. The COVID numbers in India are going up. They are not coming down. And I just want to inform to you, last 1 month we are in a very strict lockdown in Mumbai. Even in fact, we are operating remotely at present. That's a kind of the lockdown we are going through. But I wish the things will be normal in the days to come, and wish you all the best, and please do take care about your health. Thank you.